So,
Uh, uh,
completely different. It's uh, always both momentum. Uh, I'm not sure if it's going to reverse. So if we are going and if someone is going to enter this trade, what do you think they might start looking for an entry?
okay, I'm thinking you have a bit of network problem because from my side you are kind of bumping up. Maybe you might consider repeating your question so that I can get you clearly.
Be swollen and reverse where you right now. I'm so sure. But if someone was to catch a buy side, where might they look for like an order? Where would they put their order?
Okay, once again, I can't
Maybe
clearly.
probably like in an alley.
Okay,
Uh,
once again, once again, I can't clearly hear you. I'm thinking there's something wrong with your network. So if you can consider, you can type the question on my WhatsApp and then I'll address it in the group. Okay, can you kindly do so now? And for the other guys, this is a question and answer session. If you have any questions, kindly ask me and then I'll happily answer you. All right. There's someone using a Samsung SMA 826S. I've unmuted you and lowered your hand. You can ask. Okay, for the other guys, this is a question and answer session. We can ask. I've unmuted Humble Hunter FX. You can ask.
Hi, everyone is here. Everyone hear me. I
Okay, we
want
can hear.
to ask on how can you differentiate between boss and choke?
How can you differentiate between breakout structure and change of character?
Yes.
All right. The good thing is we just had that lesson yesterday, so I'm going to answer it for you. Now, let's say we have a point of interest, right? And let's say this is our point of interest where our trade is supposed to come and tape in. So let me choose a different color and put this one. Right. Now, we know that the market, when it moves, say we're in a bullish direction, it gives us highs, lows, highs, lows, highs, lows, highs, lows, highs. And our lows, they must trend above the previous low so that we consider an uptrend, right? But there's a point in time when we are going to see that we're going to have a straight breakaway, break of the previous low, right? Now, what we call this is we call this a breakout structure. Why? Because we had a low that was valid. Say we see that this low over here, it broke this high over here that I'm marking, right? So when it broke this high, this means that this low is what we call a protected low, meaning that if we break it, we've broken structure, right? But now you're also going to have this is what you call a breakout structure, right? So this is a breakout structure example, right? So
Mm-hmm.
so Let me put BOS over here. This is the simplest way we can understand break of structure and change of character, right? So now we are going to change of character. So let me type change of character over here so that we know the difference between the two. Now, a change of character, most probably when you see your trade giving you highs and lows, highs and lows, highs and lows, highs and lows, you're going to see that unlike this trade over here that we've came and broken the high first so that we straight away come and break the low, what you're gonna see is you're going to fail, come break that high. When you fail to break the high, it means that this low is weak. Why? Because this low is the one that is supposed to give us momentum or enough price that is enough to break the high. So when you fail to break the high, that means the low becomes weak and we target it. Now, when we break the low, this is not a break of structure. Why? Because this low hasn't broken a high, meaning that we call this a change of character. So let me type it again over here. So now this becomes our change of character, right? And for us to fully validate a break of structure, we have to come and break this law over here. Why? Because this law over here is the one that was responsible for the break of this high. So this becomes our protected law or our true law. This law didn't do anything. Rather, it failed to come and break the high, meaning that when we break that law, or what looks like a law, we now call it a change of character. And what a change of character means, it's simply giving us a signal that our trade might just sell. It doesn't mean that we are now selling, but it just gives us a signal that we might just sell. So that's when you see that we have two types of traders. We have risky traders and we have safe traders. Risky traders are gonna enter best from a change of character because they are in their mind, they're gonna be like, okay, if this law failed to break this high, then definitely we're now having more sellers in the market more than buyers. So our first signal or our first call that tells us that we may just sell is a change of character. I'm hoping that you've understood. If you haven't, I can go further.
Yeah, I've understood very, very well. Thank you.
All right. So, guys, this is a question and answer session. You can ask me any questions and then I'll answer you back. Okay, Maseko, I've asked you to unmute.
Okay, good evening, sir.
Good evening, how are you?
Yes, I'm okay. I'm okay. So, Mina, my question is about spikes and ticks when dealing with spikes and ticks, right?
Yes.
So, I want to understand how do I mark my fair value gaps using a lower time frame? Let's say um, I'm analyzing using 15 minutes and I want to get in using my 1 minute time frame. How do I tell this is a fair value gap or an order block?
The good thing is we have every pair that we need over here. Can you kindly tell me which pair you want me to choose?
Just go for let's go for crash 300. Yeah.
Crush 300. All right. Where are you? Here. Right. I've chosen the Crush 300. Right. So let's say you've done your analysis in M15. If you do your
Yes.
analysis in M15, then automatically it means your entry is in M1. Right. So let's say this is our M15. Right. And we want to look for what? You want to look for a gap, a fair value gap, right? So
Yes.
what we see here is
Yes.
we do have an immediate one, but I'll try to show you from the ones that existed already. This was a fair value gap in M15. Can you see it? This over here.
Yeah.
Right.
Yes, yes.
This is a fair value gap in M15. Now let's go to M5. I want you to see something. When you go to M5, if you refine that fair value gap, it has moved up to this point. Do you agree?
Yeah, yeah.
Automatically in M5, what do? You come and you put your horizontal line that marks your 50%, meaning that whenever it steps on the 50%, it's supposed to sell. And then we go to M1.
Uh-huh.
Now we are here in M1. What do you see? You see that we have a gap over here. Do you agree or not?
Yeah, 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 I do get it.
And then as soon as it reaches that 50%, just at the tip of it, it falls. What it also means is
Okay.
this is another fair value gap in M1 here. Do you see it?
Yeah,
Yeah, the one that I marked here. This is a fair value gap in M1. This was a fair value gap again in M1, but we filled it this year over here. Do you see it?
yeah.
Right. This is a fair value gap.
Okay.
This is another fair value gap in M1. Do you see it over here?
Yes, I've just seen it.
Meaning that when price comes, it is to tap on that fair value gap and fall. So I'm not sure if I'm answering your question or I'm still far away from answering or I've answered it.
You've just answered me. Thank
I've,
you.
all right, thank you. You're welcome.
Uh, sure.
All right, for the other guys that I knew in the session, this is a question and answer session whereby you ask me questions and then I reply you. I've just unmuted Simpa. Simpa, I've unmuted
All
you. You
right.
can ask.
Hello, boss.
Yeah, I can hear you.
All right. Still on that same issue, here, fair value gap.
Yes.
Can you take it from maybe H4 after we've seen what the directional bias is bearish or bullish? Can you take it from that time frame?
Yeah, we can. Can you tell me any pair that you'd want me to focus on and then we find the value gap in that?
Uh, I'm used to world trade, not derivative.
You're used to all trade,
That's cool.
not derivative.
Yeah.
All right, let's do this. Okay. I'm now in all trade. Let
All
me
right.
share my world trade demo over here. Okay.
Okay. We
Let
can
me
use pain 600.
pen 600.
Yeah.
Can you now see my screen?
Yeah. Yeah. I can see.
Okay. Let me go to that pen 600 and let's go to H4. Right. Okay. So what you see here is we have hey to now my FIFA look gives opo. Right. Let me show you this one per se. Firstly, we had a fair value gap, although it was utilized and we don't have anything close. We do have another one here that hasn't been used yet, but let's look first at the one that has been utilized. Right. This is a fair value gap that we see in our H4 on our pen 600. Do you agree that this is a fair value gap?
Yes.
This one, let's just do it like this. This is a fair value gap, right? And let's shift it to H1. Now, what you see in H1 is, let me do this over here. What you see in H1 is your fair value gap has shifted. Do you agree?
Yeah. That's where everything goes wrong.
Now, when it shifts, you have to shift it as well because we are now going through a phase we call refinement. So now
You find.
it has shifted. We agree, right?
Yeah.
Now let's go to M30. You're going to answer yourself, don't worry. Don't worry, you're going to answer yourself. Where did I throw it off? All right. Now, what you see here is, again, in that M30, it is shifted, but this time it is shifted twice. We have our first fair value gap over here, and now we have our other fair value gap, which is our second over here. Do you agree or not?
Yeah, I agree.
Right.
You can mark it.
All right. So now, as we have our first and our second, what you see is our first was filled at the bottom over here. Right. So let's go to M15. Now we remove the first one because it has been utilized. The same M15 fair value gap remains. Do you agree?
Yeah.
Let's go to M5. In M5 now, what you see is we now have two fair value gaps, one over here and one over here. Do we agree, yes or no?
Yes.
Right. So since we've taken it from H4, I'll stop in M15. I can't go as low as
And
M1.
5 1.
Yeah.
Yeah.
Yeah. Because the analysis that I do in H4, I have to enter in M15. So now let's do this. Let's do this. Let's come again. Let's do this on our defined fair value gap, and we do this, utilize there, take it to the bottom of our item over here, and then we mark the 50%, which is here, which is somewhere here. Right. And then price comes. If you check again, we have another one over here. So we need to shift it as low as here. Right. So this is now perfect like this. Now let's mark properly on our 50% of our fair value gap. Let's use this box. Price just comes and taps, fills the 50% and then falls. I think we can all see it.
Yeah, I can see. So can we
So
wait for the second FVG?
the possibilities that price will come and fill our second fair value gap when it comes back again in the future. Yes, they are, because it hasn't been utilized, but it hasn't been utilized in M5. But let's say we go to H4. Let's see if it has
All
been
right.
utilized in H4. In H4, this whole fair value gap has been utilized. Like we've actually mitigated from it, but in M5 it hasn't. So in our larger time frame, it is, but in smaller time frame, that's when you see that when we come back with a buy, it's just gonna come and sometimes respond a bit and then continue going up.
Yeah, that's where the question is. Is it no longer valid, or was in H4 is mitigated, but in M15, the second one
It
is not mitigated?
it's valid in the if in the terms that in each time frame it hasn't been mitigated, so it has to be mitigated in each time frame. Although it doesn't mean that when it gets mitigated, it's gonna fall as much
Oh,
as is how the fair value gap in H4 fell. So obviously the bigger time frame is gonna have a bigger move, but the smaller time frame is gonna have a smaller move.
all right. All right.
Okay. For the new guys
Okay,
that
thanks.
all right, for the new guys that are in our session, this is a question and answer session. If you have any question that you need to ask, kindly ask so that I answer you back. For the new guys, can you kindly ask so that I answer you back? You can raise your hands and then you can ask your questions and I'll answer you back. All right, we have a question here. I'm gonna Maeb, you can ask.
Or can you hear me properly?
Yeah, I can hear you.
I sent a message on WhatsApp. My network is not stable enough for communication.
Okay. I'm just opening your message and seeing it right now. You said V25 is showing a strong bullish momentum on monthly to 1 day time frame. However, it's a monthly order block. How can I catch up reversal or a continuation of such a high time frame? Right. In order to understand your question, we need
Yes.
to In order to understand your question, we need to go to V25. So let's open V25. Okay, we need to go to V25. So now in that V25, the only largest time frame I can go as far as my trading view is concerned is D1. But you said V25 is showing a strong bullish momentum on monthly to one D1 time frame. So let's zoom out to see what you mean. Okay, so however, it's at a monthly order block. How do I catch up a reversal or a continuation on such a high time frame? So I'm assuming what you mean is on your monthly time frame, this is the area that you're seeing an order block at. Confirm. Can you hear me? Can you hear me? All right. So basically, to answer his question and to understand the nature of his question, what we need to know is in his monthly time frame, obviously, he's gonna be looking at this at his OB. Now, what we see is we can't be having what we call equal highs, right? Why? Because we said we don't believe in support and resistance, because this is where all liquidity lies, right? So this is our resistance. Firstly, what you see is we have equal lows, equal highs, right? Even though I'm not personally convinced with this small wick that wicked, I can't say this is enough to have taken liquidity, right? But what we see in our D1 time frame is we have let's go again. High, low, high, low, low, high, low, and then high, low, high, low, high. So basically, what our D1 momentum is telling us is we are still in an uptrend. We haven't confirmed a downtrend yet. But what I would like to do is, at this point in time, go to my smaller time frame like H4. What do we see in H4? H4 hasn't given us any form of break of structure or downside momentum. So in our H4, we still continue being in a bullish market, right? Now, as we continue being in a bullish market, what we are not expecting to see here is we have a high here. We can all clearly see it. We have a low here that we can see. This high was broken to give us what? To give us this high over here and a low and a high, right? So our holding high and low are, we have this high and we have this low that are holding our structure currently at the moment. So what we are not expecting to see at this point in time is a break of this low, right? In D1, this would be a change of character, but in H4, this would be a break of structure, right? So now when it's me, especially when I get to these areas or when I get to these points, I try to look at what is it really that we have at these points that is enough to move price. We see that we have an OB over here in our H4, and our OB, what can we can see is price is reacting at that OB. Right. What time does the H4 candle close? So I don't know if you are very particular with time frames, but we are hoping that this H4 is gonna close at around 10, right? It's around 10. So can we say with where time is, we are going to have a straight down sell. So what we are looking forward is at least have a hammer or at least have our candle that looks bullish so that we say that our order block is reacted and we continue with the upward momentum, right? Although you see that you have an order block in your monthly time frame, how many times is that point been used? One, two, three. I think if we go back to our 24-hour time frame, what you can see is we've used this area. Let me come and mark it. We've used it once, twice, and then three times. So it's becoming weak, right? And following structure, we know that we're in an order block in H4 and we need to push a bit up, right? So if it's me, what I would do personally is I would focus more on where my structure is currently going rather than how it was when we were at those points. Because history always repeats itself, yes, but currently we want to work with current price flow. And what it's telling us is we are currently in a bullish market, not in a bearish one. All right. I hope I answered you well. Anyone with a question, kindly raise your hand and you can ask. Anyone with a question, can you kindly raise your hand? You can ask me and then I'll answer you back. I wanted this to be a question and answer session whereby you just ask me everything that has been confusing you and then. Okay, Willard J. Chikwanta, I've unmuted you.
Hello, sir. Can you hear me?
Yeah, I can hear you clearly.
Good evening, sir.
I'm good. How are you?
Thanks. I'd like to know.
Yes. I can hear you. I'm not sure if it's his network. I'm not sure if it's his network. Okay, can you repeat your
Yes, sir.
question?
Yes. Can you please help me, sir, on how to combine?
On how to combine what? I think your network is not okay because I can't hear you. I can hear you clearly. So I'll unmute. Okay. Can you repeat that? I think your network is having a problem.
Yeah. My network is bad. I was saying, can you please help me on how to combine the Fibonacci, the tracement, and the pullbacks?
All right. So which pair would you want me to look at specifically?
Crash 500.
Okay, Crash 500 it is.
Yes.
Right. Right. So let's jump to Crash 500 and what you can see on Crash 500 currently is we are we've been giving a strong downtrend, but it stands. We are buying, meaning that we are giving highs, lows, highs, lows, highs, lows, highs, right? So if we are at a stage like this, what would what we would want to do is when we come and we take our fib, let's say before we had, for now, let's forget that we had this whole move over here that I've grayed out, right? So let's say we've discovered that we have a high here. What we'd want to do is we touch our previous low and a high. And what we expect is we expect that when price comes, either at our 0.5, our 0.618, or our 0.71, we need to buy. And what you see, price came to those areas and then it bought, right? But you don't just buy. What you do now is you have to confirm with your smaller time frame entries or your smaller time frame structure. So let's go to M15 and let's go exactly to that point and see what happened when we got there. Right, what you see is when we got to that point using our fib, we were having a low, a high, a low, a high, a low, and then our structure started shifting with the change of character, a break of structure, and then we went up. Where did that really happen? At the 0.618% over here. Now, when we have a new low and a new high, what do? We take our fib again. Now what you see is we have a new low and a new high. And what did price do? Price came to the 0.5% over here. I think we can all see it. And what did it do? It bought. But when it approached that 0.5%, what you can see is we had our market structure that was okay. We had our low, high, low, high, low, high, low, change of character, break of structure at this point, and our trade went up, meaning that we had a new low over here and a new high. Let's go and look at that new high. Right, we have a new high over here, which is the currently ongoing one with a low and a high that we have over here. So what we are looking forward is for price to come retrace. What it did actually is you can see that price came with a structure high low, tapped the 0.58%, 0.5%, gave us a change of character, and now it's going up. So for this particular trade, like Crash 500, what you know is it's going up, it's buying actually. I don't know if I answered you well.
Thank you very much, guys. Now.
It's only that I was now using M15, but if you go to H4, let me go to H4. That's the time frame that we started with.